My name is Diane Mercer. I am 41 years old, and I work as a forensic accountant for a mid-sized audit firm in Indianapolis, Indiana, where my job is to find the numbers that someone hoped nobody would find. I have spent 14 years locating money that disappeared into places it was not supposed to go. I am very good at it. My brother spent 6 years assuming I would never look at his numbers the way I look at everyone else's. He was wrong about that. The night he handed my 12-year-old son a cold sandwich while his own children ate $40 entrees, I finally stopped finding reasons to look the other way. We didn't order for Marcus, my brother said, sliding a paper bag across the white tablecloth like he was passing something under a door. His 2 kids were working through steaks. My mother was rearranging her napkin. My father looked at the wall. Marcus looked at the bag, then at the table, then quietly moved his science fair ribbon off the tablecloth so nobody would spill on it. That ribbon was the reason we were there. Marcus had just won first place in the regional science competition for designing a water filtration device small enough to fit in a backpack, aimed at emergency relief situations. My brother's children had entered the same competition with a volcano that erupted blue foam. They received participation certificates. My mother said, "You should have called ahead, Diane." I looked at Marcus. He was opening the bag with the careful expression of a child who has learned that making a scene makes things worse. I said, "Noted." My brother mistook my calm for acceptance. He raised his glass and made a toast about family perseverance that was entirely about himself. What he did not know was that 3 months earlier, my firm had been quietly engaged to review the financial records of the family business, a commercial property management company my father had built over 30 years and was preparing to hand to my brother to run. My father had asked me to do it personally because the insurance carrier had flagged several expense anomalies, and my father trusted me to find out what they were before anyone else did. My brother knew I had been asked to look at some documents. He believed I was helping organize the transition paperwork. He did not know that my preliminary report was already 97 pages long, or that the blue folder under my chair contained 6 months of findings, or that the foundation board members who funded Marcus's competition had also been invited to this dinner not to celebrate my son, as everyone assumed, but because 2 of them were also members of my father's advisory board, and I had asked them to be present when I explained what I had found. I smiled at my brother, ordered Marcus a proper meal from the regular menu, and waited for dessert. Before I tell you what was in that folder and what happened when I stood up, tell me what time is it where you are, and where are you watching from? I want to see how far this story travels. My brother Kevin had been managing the family business informally for 2 years while my father's health declined. My father, Robert Mercer, had built Mercer Property Group from a single rental unit into a portfolio of 12 commercial properties across central Indiana. He was a careful man who kept precise records and reviewed every invoice personally. When his health made that impossible, he asked Kevin to take over day-to-day operations and asked me, periodically, to check in on the numbers. The first time I looked, I found nothing obvious. The second time, 6 months later, I found a vendor I did not recognize, a maintenance company that had been paid $34,000 over 8 months for work across 3 properties. I pulled the contracts. They were signed by Kevin. I pulled the work orders. They listed repairs that the property managers at those locations had no record of authorizing or observing. I ran the vendor registration. The company had been incorporated 14 months earlier. The registered agent was Kevin's college roommate. I did not confront Kevin. I called my father, explained what I had found in general terms, and asked for formal authorization to conduct a full audit. My father authorized it in writing the same afternoon. Then I closed my office door and started from the beginning. What I found over the following 3 months was not complicated. It was methodical. Kevin had been routing payments to the Shell Maintenance Company for work that was either performed by the existing in-house team at a fraction of the cost or not performed at all. The markup was consistent roughly 3 times the actual cost when work was done, and full billing when it wasn't. Over 22 months, the total transferred to the Shell Company was $187,000. The Shell Company had one bank account. The account had one regular recipient. That recipient was Kevin. I also found a series of vendor contracts that Kevin had signed on behalf of the company for services my father's existing agreements already covered, effectively paying twice for the same things. And I found expense reimbursements, submitted under a category my father had created for emergency property repairs that corresponded to dates Kevin had taken his family on vacation. My report was 97 pages. It had exhibits, it had timelines, it had a summary section that any non-accountant could read in 20 minutes and understand completely. My father read it in one sitting. He called me when he finished and said nothing for a moment. Then he asked me if I was certain. I told him I was certain of every number and had documentation for every finding. He said he would think about what to do. I told him respectfully that given the amount involved and the nature of the transactions, there were notification obligations that would need to be met regardless of what he decided about Kevin personally. He understood what I meant. The dinner was my father's idea. He wanted the advisory board members present when the findings were disclosed, because 2 of them were also investors in the property portfolio and had a legal right to know. He had also, I think, chosen the setting deliberately the same restaurant where Kevin had hosted his own celebration dinner 6 months earlier after being formally named as my father's successor. My father was a precise man. He understood symmetry. I had not planned to wait for dessert. I had planned to let dinner proceed normally and make a brief statement before the check arrived. Then Kevin handed Marcus a paper bag and slid it across the tablecloth, and I decided to let him finish his steak first. When the dessert menus were distributed, I stood up. Kevin looked at me with the expression of someone who assumes a woman standing at a dinner table is about to make a toast. I did not make a toast. I said calmly that before the evening ended, I needed to share some findings with the group, and that my father had asked me to do so in the presence of the advisory board members. I set the blue folder on the table. I placed a bound copy of the report in front of each advisory board member, and I began with the summary section, which I had written specifically to be read aloud. Kevin's fork went still at the 3rd sentence. By the 6th sentence, he was looking at my father. My father was looking at the table. By the time I reached the total $187,000 over 22 months, the room was completely quiet. One of the advisory board members had already opened his copy to the exhibit section. The other was looking at Kevin with the expression of a man doing arithmetic he does not like. Kevin said it was out of context. I asked which context he would like me to provide. He said the vendor was legitimate. I referred him to Exhibit C, which contained the incorporation documents, the registered agent's name, and the bank account records. He said the reimbursements were authorized. I referred him to Exhibit G, which contained the expense policy my father had written and Kevin had signed, and the vacation dates that corresponded to the emergency repair submissions. He said I was doing this because I was jealous of his role in the company. I told him I was doing this because my father asked me to, and because the numbers required it. My mother said I was humiliating the family. I told her the family's finances had been misrepresented for 22 months and that the people around this table had a right to accurate information. My father said, quietly, that he thought we should let the professionals handle the next steps. Kevin looked at him, and something in Kevin's face changed the specific change that happens when a person realizes that the parent they expected to protect them has already decided not to. Kevin left the dinner before dessert was served. I stayed. Marcus had his meal. The advisory board members asked methodical questions that I answered methodically. Before the evening ended, my father had authorized a formal referral to the company's legal counsel and instructed that Kevin's operational authority be suspended pending review. The formal process took several months. The shell company was dissolved. The funds were traced. Kevin's role as successor was formally terminated. The company's financial controls were restructured with outside oversight, and my father asked me to sit on the advisory board going forward. Kevin did not speak to me for most of the following year. When he eventually did, what he said was not an apology exactly. He said he had convinced himself the money was compensation he was owed for managing the business under difficult circumstances, and that he had told himself he would pay it back before anyone noticed. I told him the most dangerous financial lie a person can tell themselves is that they will replace what they borrowed before someone counts it. I had seen that exact sentence in a dozen fraud cases. It was never true. My mother called my methods cold. I told her documentation is not cold. It is the only language that cannot be revised after the fact. My father told me, 6 months later, that asking me to look at the books had been the hardest phone call he had ever made, and the most important. He said he had known something was wrong for months, and had kept finding reasons to believe there was another explanation. I told him that was normal. It is always harder to look clearly at the people we love than at the ones we don't. Marcus has no memory of the paper bag. He remembers winning the competition. He remembers that 2 of the people at the dinner asked him serious questions about his filtration device and took notes. One of them later connected him with an engineering program at a university that works on emergency relief technology. That is the thing about doing your job carefully and honestly in a room full of people who assume you are there to be overlooked. Sometimes, the people worth impressing are already watching. The deepest lesson I carry from that evening is not about accounting, although I did add a section to our firm's fraud detection training about family business structures and the specific vulnerabilities they create. The deeper lesson is about the cost of looking the other way for people we love. I had seen anomalies in Kevin's early numbers and chosen generous explanations for all of them, because I wanted to believe that my brother was the person I had grown up thinking he was. Every month I chose a generous explanation was a month he had less reason to stop. My grandfather used to say that the truth does not need protection, only exposure. Numbers do not lie, they accumulate. And the person willing to look at what they have accumulated, without flinching and without generous explanations, is the only one capable of stopping the damage before it becomes irreversible. My brother said we didn't order for Marcus. He meant it as a small humiliation, a reminder of where he thought we stood. He did not know that the woman sitting across the table with the blue folder had already counted every dollar he thought he had hidden, and was simply waiting for him to finish his steak before she stood up and said so.